TradingNut, episode 27.
When I started seeing where price was going, or when I started seeing a candlestick pattern or some kind of structure where it might cause a reversal, then that was my go-to signal.
The market's going to do something. Your job is not to fight it.
The market never, ever runs away. It's always there.
That personal diary of trading will make you a much better trader than...
I could be right about the direction, but wrong about the trade.
Don't focus on the monetary side.
Trying to make too much money on a trade is what I have seen killed every trader.
Your losses offer you some of the greatest insight you can find into your mistakes.
Relax, learn the process.
Candlestick pattern trading is a freaking trap.
Don't be in a rush to become a millionaire.
Let the market tell you what the market wants to tell you.
This podcast is not financial, trading, or investing advice of any kind. What's up, traders? Welcome to another installment of the TradingNut podcast. I'm your host, Cam Hawkins, and today, before we get into the interview, I just want to talk about the terrible events that have gone on over here in New Zealand. Now, for those listening for the first time or haven't listened to many episodes, I'm based in New Zealand. I'm in Wellington. I'm on the North Island, and Christchurch obviously had those atrocious attacks in the mosque just 2 days ago from when I recorded this. You'll be hearing this probably a week or so after. Now, look, just my heart goes out to the guys that were affected by this incident, and I know that there are listeners out there from Christchurch. So, guys, I hope you and your family and friends are okay. Just thinking of you guys at this current point in time. Look, it's interesting the fact that we're so far away from the next country. I mean, we're essentially probably the furthest away out of any of the major countries in the world from any other country. We're 3 hours away from Australia, and that's the islands, the Pacific Islands. So it is pretty significant in terms of the fact that, you know, we are miles away from anyone else. Whenever we have a war, whenever there's a war on, we sort of know that we're not going to be affected by, you know, nuclear bombs going off and all that sort of stuff. So when it's on your back doorstep, it does really make you sort of reassess what's going on around here and in the world and in your life, and what you can do to affect the changes that are going on for the better. So, guys, without going on about it too much, it's been a sort of a tough week here for not just me, but the rest of the country. So, onward and upward, we just carry on as per normal. New Zealand's not really like this normally. It's very, very nice place to live. Righty-ho, today's interview, we've got Co-Success Lee FX from the US. Now, this guy, we actually talk about a number of different things. He's got an interesting journey, a bit different from everyone else. So he's only got a short journey of a couple of years, but he's managed to cram an awful lot into that. So we go into that. We hear about how he trades the currency market. So he's primarily focused on those, and we also talk about a bit about crypto. So he did a bit of crypto trading and has some good views on that as well. And we hear where he thinks Bitcoin will either spike or not. So a key price level we talked about in the show. And one of the key aspects is all around adapting. So adapting, I suppose, learning, adapting, test and learn, quickly adapting to things that aren't going so well, and making changes to see if you can find things that work better. We'll hear more about that in the interview. Now, it sort of takes me back to what I'm doing at the moment. So at the moment, I've actually gone back into a 3-month contract. So I've stepped away from TradingNut. Well, I haven't stepped away. I'll still be here doing all my usual stuff. But I've also added in a full-time contract for next 3 months. And look, I've had to adjust and think, well, it was a good opportunity to come to basically take and give myself some breathing room after the contract ends for probably 3 to 6 months. So I should be good to go after this contract ends for 3 to 6 months and hammer this home. And I'm back in the markets, guys. I'm back fully into the markets this week. Had some great trades, actually. Of one good day, one really, really good day. And a lot of learning, which is good, and a lot of adapting, which is good to see as well. So, guys, before we get into the interview, one other last thing I want to tell you about is that I've got a webinar coming up, and I'm going to be doing webinars going forward a bit as well. So Stay tuned for that. I'm either going to add that into an episode or do a separate episode. You'll find out when it comes out. Stay tuned. Sign up to the newsletter, the email newsletter, or follow us on social media, and you'll find out when it is happening. So, guys, I'm looking forward to that. I haven't done a webinar for a long time, so I can't wait to get back into it. Right, what else can I say? I think that's enough. Let's get on with the show today and, introduce Koo. All right, guys, so we've got Koo here from Chicago. Was it Chicago that you're... Where are you living?
I live in Wisconsin.
Wisconsin. It's up there, and now, where is Wisconsin exactly?
I'm like 4 hours away from Chicago.
4 hours away. Yeah.
Up north.
Yeah. My friend lived in Buffalo. Very cold up there, yeah?
Okay. It's not too far away.
Yeah.
Just 5 hours.
And so we got Koo Success Lee FX. So you go by Success Lee FX. Why do you go by that name? That's one question I want to ask you straight off the bat.
The name?
Yeah.
I wanted to put my name out there and added a little twist into put the Success name in there as like kind of like my middle name. And then through the FX because I trade Forex. So
cool. All right, that makes sense. Well, look, let's get on with some of the questions. So, I mean, first of all, I want to find out like how you first got into trading, your story to date, like a bit about you personally and that sort of stuff.
Yeah, for sure. I mean, started back in January 2017, and I didn't really want to get into live trading or any Forex markets, and I was into a lot of network marketing companies at the time, and I was trying to figure out, what I wanted to do, because the biggest problem is that in network marketing is to be that, that top recruiter and to keep building that network of people. And I got sick and tired of doing that. And a couple of my friends were doing Forex trading, and they were part of another network marketing company, and that's how I got into it back at the end of December of 2016. And so that's how my journey all started. So, and here I am right now. I mean, that's been 2 years and 3 months. Yeah, 2 years and 2 months now of actual trading. So It's come a long ways.
It's not that long a career compared to like some of the guys I've had on here, which is strange because you actually, one of my listeners recommended that, like I went out to them all and said, hey, look, who do you think I should get on the show? And definitely one of them might have even been more said should definitely get you on. And I know because I reached out to you ages ago and you finally you finally had some time so that was a long time ago that I asked them, and you finally had some time now, so it's good to get you on. So I suppose that's quite interesting. So what I'd be interested to hear is like how did you go from getting into it 2016 in December to get to a point now where you've got guys who are recommending that I interview you on the show. So obviously you must be doing something right. So how did you get to that point?
I have to say the number one thing is to get to the stage where I'm at right now is to sacrifice that sleep time. I sacrificed a lot of my time, especially spending time with my family. I mean, as soon as I got done, I was still pursuing college full-time as a full-time college student. And so I was still watching my two daughters at home. I mean, 2 years ago, my daughters were 3 and 1. So that was such a hassle taking care of them and also, going to school full-time, 8 to 10 hours a day, and then trying to juggle with trading Forex. And the number one thing, the number one thing to sacrifice is your sleep time. I know it's really deprived on that because you get, you get really tired. You're so stressed out. You're so focused on making this kind of money, and you want to get there as fast as you can. And that's how fast I got into, my level of experience in trading is to, all the hours that I put in so that I can be where I'm at right now. And the number one goal for me was that to be a stay-at-home dad, but to also make that kind of income to where I didn't have to go find a job. That was the biggest thing.
Okay, that is interesting. I mean, a lot of the traders I interview, not pretty. I can at least say probably 30% of them do go down that route of sacrificing sleep, like literally, that's it's a few years of sacrifice. So how did that? I mean, what are the hours you were sort of doing then? If you're sacrificing sleep, I mean, how many hours sleep were you actually putting at risk here?
Oh man, I mean, when I was going to school full time, I was only, at most maybe 5 hours, 6 hours sometimes. And so as soon as I would get home from school, I would constantly start staring at my computer and staring at my phone because I trade on the phone a lot. And that's how I got introduced to MetaTrader 4 using on my smartphone. So I was constantly staring at the phone and on the computer screen. But when I'm in bed, I'm always staring at my phone. And I'm always constantly trying to scalp the markets. So that's how I got really involved into scalping the markets versus swing trading. So.
Okay. And so do you want to walk us through like how that sort of early stage experience was when you were scalping the markets? I mean, were you making money straight off the bat, or did you get some education, or how did that come about?
Yeah, I joined a company called iMarkets Live in January of 2017, but I was only with them until March of 2017, so it was only 2 months. I paid a $200 scalping course on Facebook, and from there, that really got me into trading shorter time frames, like the 1 minute, 1 minute, 5 minute, and 15 minute, and to scalp the markets from those shorter time frames, like I had to learn the entries and exits of when I wanted to get in during New York sessions. If I couldn't trade New York sessions while I'm at school, then I know that I can come back and scalp the markets within the first 2-3 hours at Tokyo sessions, and then wait till London opens and scalp that market for 2 to 3 hours. And then if I know I have night class, I'll do the complete opposite. I would scalp the markets during New York sessions and all the way to Tokyo, and then go to my night class and then come back and try and do it for London again. And so that's how I got really into scalping. But I mean, it took, like I said, I lost at least, about 4,000 right away in the month of February of 2017 before I did that video of me flipping that 350 to 26,000 in traders away. That was in the same time frame, but that was at the end of February until March 3rd. March 3rd was, and now I'm on payroll, and I ended up losing pretty much, 18,000 pretty much in one day, and then Monday I lost it all. I lost the rest of the money. So
you flipped, was it 350 to 26,000, was it? Something like that? And
that was my first YouTube video that I was talking about, yeah.
Ah, right. And how on earth did you lose it all? Just what was wrong with your strategy so that you lost it all on non-farm payroll?
I didn't have a set strategy at all, especially when I was trading right away. I was so aggressive. I wanted to be a high-risk, aggressive trader, and I always wanted to be, high risk. But in order to be really, really great at high risk, you got to pick your certain times of the day and your certain days of trading. I didn't have that. In the beginning when I started flipping, I was all about making a lot of money, but I didn't have any set goals. I didn't pin myself to where I want to find my own methods of trading. I was constantly just looking for more ways to increase profits and pips. And eventually, on non-farm payroll, that was the first time trading non-farm payroll. I ended up going, more than, altogether, I'd say the lots were like 32 standards, I think, or 30 standards. And I ended up losing 17,000, 17,600, whatever it was, the total of that. And so, to actually take that kind of a loss, I mean, it's really devastating because, you built a really small account and you made it so huge, but then at the end of the day, you end up losing all because you got so greedy, and that's what happened to me. So I really don't want nobody to repeat the same mistakes that I did.
And so you made that mistake, and what did you do, or how did you sort of recoup yourself and regain your confidence, or whatever it was, to then move on from there?
Yeah, I actually didn't try to recuperate, my strategies or my patience at all. I was constantly, even though when I lost that 26,000, I would constantly try to re-flip the account back to 26,000, whatever it was, where I tried to put 400, 500. I didn't put 800 and just try to get it back up to 26,000. The most I got out of those other accounts that I blew, because after I blew that one, I blew it at least, I want to say 9, 10 accounts right away within less than 3 weeks. But I would get the account up to like 6,000, 8,000, maybe close to 10,000, and then lose it all on Friday. So I come to realize that Fridays were my weakest points of trading. But I still wanted to keep flipping the accounts. And until I came down to the last time I was flipping the account at the end of April, I was like, I need to take a break. I'm really stressing myself out. The wife's not happy about it, and I'm not happy where I'm going trading Forex. And I'm losing so much patience. And it came to the point to where, maybe I should just find something else. Came to the point to where maybe I should reconsider changing my career. To the point to where, what if I decided just to go back and work a normal job instead?
Right.
It hit, you hit that breaking point to where, you need to step on the brakes and look at life sometimes and figure out exactly where you're trying to, go in life versus just trying to fast forward your life. And that's where I had to make, I had to make that. I had to pull the emergency brake and say, I had to look at myself. So, if I want to make Forex work, I got to make it work consistently, not just one day. Like me trying to make millions of dollars in one day, when you can make $1 million by, in one whole year consistently, if you consistently profit every single day, you can get up there. And so my end result was short term, not long term. And by July, I started figuring out different types of methods. I started approaching more into swinging versus scalping. And I found that swinging gave me more patience and much more better activity in trading versus scalping, because I was constantly trying to fast pace myself along with my family and also trying to finish up school. And so I didn't graduate school until the end of fall. So that was the biggest hurdle right there, is finishing the last semester in fall of 2017.
Cool. So are you now full on swing trading versus scalping?
Right. Yeah. So I'm more into swinging for weeks or months, and I'm more focused looking at the weekly chart and the monthly chart versus trying to go back and look on smaller time frames. Very rare do I ever look at the smaller time frames. Now, if I do, then we're trading. Basically, me and my group we'd be trading high impact news. And that would be the only time I'd be scalping the markets.
Yeah, it's interesting. I mean, it's taken me this long, literally this long, to move away from the lower time frames. And I've been at this thing for 10 years, and so you obviously did it a lot quicker than me. So hats off to you. You probably put in a lot more hours on the charts from me anyway at the start, by the sound of it, with the lack of sleep. So do you want to give us some more stats around what you're doing at the moment? So you're saying that your trades are running for a few weeks, and you've got some. You do trade high impact news. So
right.
So what's your typical winning percentage at the moment?
I don't have a software that keeps tracks of winning percentage. Now, there are days that I have to lose. I have to take losses, especially when I'm swinging, whether we're swinging for the whole week or for the whole month. Most of the time, within the first 2 weeks, I end up looking to see how many losses I want to cut back, especially if it's not going to turn around. Especially when you're swinging, you can see how much reversal can cause for it to come back for you, so you can make that kind of money back or break even. If not, then you're going to have to cut all those losses down. And so when I started swinging, I didn't know when to cut losses. I would just hold on to it. But now, if the first couple of days ain't working out, we cut everything off and reverse the trades. And that's the most important thing, is that to minimize the losses so you can maximize your profits. And so the biggest issue that when you're swinging is that if you can't identify the reversals and the patterns that are coming in, and you can have one unexpected news event, political event is probably the biggest issue. Let's just say Trump decided to do his way of doing trade wars again to China. I mean, you're going to have to be prepared for an unexpected news break, and that's not coming out in the economic calendar. But you have to be prepared on the fundamental side if that were to happen. And so there's a lot of unexpected news, especially with Brexit too, with the pound. So pound is so volatile at this time, especially at this time of year right now. So you got different types of unexpected events to be prepared, especially when you're swinging for the long term. And when you move into so 2 years ago, I was so focused on indicators. Now I'm focused on naked Forex. I'm more into price action and candlesticks versus what I was doing last year. Last year, I was all about having 8 to 10 indicators on my charts, and I was constantly looking for different confirmations. But now with naked Forex, it eliminates the process of looking at all those indicators. You're constantly looking at where the price is going and where the candlestick structure is creating for your trend, so you can follow that trend until you see a possible reversal setup. So,
and that's quite interesting. Maybe we'll dive in a little bit deeper on that. But what about your risk to reward? I mean, if you're exiting trades based on a couple of days, so you may not have a fixed risk, but what about that compared to the reward? I mean, when you start off with the trade, what does your stop look like to the profit target?
Yeah, so for me, I don't set any stop losses for any of my trades, whether I'm scalping or swinging. So for my risk reward, especially whether it's a small account or a big account, I always test lot sizes. That's the biggest thing, especially if you want to test your confidence in trading, is that if you test a micro lot at 0.01 and a 0.01 sell and a 0.01 buy, now you have two positions to focus on where the direction of that currency is going to go. So if I were to trade USD JPY, the dollar to the yen, then I would constantly put two of those micro lots positions at 0.01 on a buy and a sell. And eventually you're going to start seeing some kind of direction and movement with those two positions. If that position where your buy position is positive in blue, making money, then you would follow that buy position. Same thing for the sell position. This is something that I did when I was flipping the account from 350 to 26,000. So I would hedge two micro lots, because that's the best way to risk your position, is that you're risking the smallest lot size to make the most amount of money. Versus if you see an entry point that's a perfect entry, or you see something that where it's a breakout going out of the structure of the candles, and you think that's an opportunity to buy or sell, and you go all in, because that's what I did back then. If I went all in and it completely reversed on me, then I would totally lose out the amount of pips and money, and now have to sit on this trade thinking that it might come back. Most of the time, it doesn't come back. And then that's when you have to look back and say, when do you want to cut your losses? And so the biggest advantage is that you're always risking positions to make that kind of money, but it doesn't hurt if you're risking 0.01 buy and a 0.01 sell, so you can see some kind of direction, especially when the market's open on a Sunday, because it just fluctuates up and down so much, and you don't know exactly where it's going to go. But by testing these two lot size positions on that one currency pair, or 3 or 4, whatever you're comfortable trading with, then you can figure out where the direction is going to keep going for that session to the next session. And then if it keeps going, then you find that that's a good trend to follow for the next couple of days, or maybe for the next couple of weeks, and how strong that candlestick structure that's creating that trend for you.
So let me just get that straight, because I'm a little bit confused.
Yeah.
So you're setting two orders at the same time, like let's say at the start of the week, you're going, right, buy and a sell, 0.01. That makes sense. And do you cut the buy or the sell order at some point when you see the direction is happening, or do you just wait for it to fluctuate and then keep cutting them and changing them, or how does that work? Or are they just like purely just to have a look at what direction we're going in? Okay, well the buy's making profit and the sell's making a loss.
No. It's I always keep it going, especially for the whole week. If I'm gonna swing trade from Sunday and all the way till Friday.
And you'll just so it's like you're moving average almost, like a. Right. So if the buy's in positive, then you see that okay, I should be buying, and if the sell's in positive, then you're okay, right, gotcha.
Right, because
you don't make money on these. You don't make money on these trades, yeah.
Right, you're not trying to make money. You're trying to find direction. That's the biggest thing.
Okay, I'm with you.
Because the biggest problem that I had in the beginning was that I didn't know where the direction was going. Even if I was scalping back then, I was making good money scalping, but I was just always guessing when I want to enter. Support and resistance is great, especially for higher time frames, like 4-hour, daily, weekly, and monthly. But if you look at support and resistance on 5-minute, 15-minute, 30 minutes, sometimes even 1 hour can break its own resistance and support. And so when you put yourself down on those lower time frames, then your support and resistance isn't as strong as you were to move from the 4-hour to the monthly. With that, if you don't test any positions, if you're not testing positions to see direction, then you're basically putting that position at risk, more at risk versus you not testing a position to see if it's going to make you money. And so it doesn't hurt to test your abilities every single day in the markets, because the markets is always constantly changing. Even there are days where, especially let's talk about this week. What happened this whole week? Nothing really happened except if you were trading the pound. And I love trading USD JPY and I love trading gold, but those two pairs didn't really do much in market volatility for this week at all. And if they're not going to move much for this month, they're not going to move much at all for the rest of this month. Then you're waiting for that. If it's in the consolidative state where it just fluctuates, 10, 20, or maybe 50 pips at most, then now you got a price gap where you can range it off of. And if this is going to sit there, there's no point testing a position because you're waiting for a breakout to come out of that zone. That's the biggest thing, especially when pairs just fluctuate in a certain range of price. And so, like I said, it doesn't hurt to test your position so that you can get more comfortable. And I don't do it as much as I used to back then, but I did it so that I can build my confidence level so that I didn't have to be testing positions all the time. Because if I'm testing positions all the time, then I'm constantly hedging positions every single time, and that's not really making the most amount of money. That's the problem right there. So
yeah, that makes sense. That makes sense. So what pairs are you trading? I mean, how many pairs and what are they?
Oh man, I look at my watch list. I trade all the majors. I trade the dollar as well. I trade gold. I trade the dollar to the yen, dollar to the dollar Swiss, the dollar to Canadian. I trade euro to the dollar, pound to the dollar, Australia to the Aussie dollar, and the Kiwi dollar, the New Zealand dollar as well. And then I do look at US 30, which is Dow Jones, because it sometimes inverse correlates with the US dollar. So when people are buying stocks, Dow Jones goes up and then the dollar goes down. So that's really good inverse correlation of what I've been seeing so far. Other than that, yeah, I mean, I just like to trade the major pairs. So 8 to 10 pairs pretty much for the whole week.
Nice. And how many trades would you have running at any one time?
At one time, I'd say at least 20, 30 positions.
Wow, it's quite a bit for swing trading.
It is because when people swing trade, they only put one position. But in order for you to capitalize and maximize the amount of profit and the same amount of pips, so let's just say USD JPY is going up on a massive uptrend, 50, 60 pips. Instead of catching 50, 60 pips on one position, what if you could catch 50, 60 pips on 10 open buy positions? Now you're making 500 to 600 pips because you have a total of 10 trades open following the uptrend. And that's the biggest difference, is that you want exponential growth, not addition. So in math, you want to exponentially grow your account, not to just add, not to do the basic math of adding. You want to multiply. That's the easiest way in Forex. And same thing in banking, same thing in calculation and math. So if you can catch the same amount of pips and profit on one position, why not do it for 10, 20, 30 positions?
And do you scale into these positions, like as you make some profit, you will add more positions, or are you sort of just putting a lot of positions on at the start?
I usually do it at the start now versus waiting every 5, 10 pips. How I did it back then, I would wait every 5, 10 pips. I would add a position. But in that case, since I wasn't using stop loss, then if the position were to get reversed or had a massive pullback, whether it could have a massive pullback the next day or maybe the next 2 days or maybe the next session, then whatever I added every 5, 10 pips, I would lose my money, because most of the time the broker's going to stop you out, because you're adding so many positions where the margin can't cover that, especially when there's a major pullback. So, and if you trade USD JPY, you can see all the major pullbacks that the dollar to the yen has. So it gets to a point to where if you know you're gonna add that many positions in, then I would rather be negative in the beginning to be positive later versus be positive in the beginning and then be negative later. It doesn't make sense to go from positive to negative later when you can sacrifice the positions now to make the most later on. That's the biggest thing.
And so, I mean, another question I've got is, do you lock in some profit by moving your stop up to either break even or anything like that?
No, with that, like I said, to this day, I still don't use stop loss where I'm swinging or scalping. And the biggest thing to me is that my daily goal of making profit is this certain amount a day, and my weekly profit goal is this certain amount every week, and so that I can get to my monthly income. That's the biggest thing that I have set every single day and every single week. Now, if you don't have that and you just got started or you've been trading for a couple of years, you gotta have some kind of financial plan behind trading Forex. Otherwise, you're constantly trying to build an account to whatever the extent is, and you don't know, and the next thing you know, you lose it all. So, gotta have, like I said, the financial discipline of trading really needs to be there. And it's the same thing if you're going to the casino. It's the same thing you're going to play the lottery. You have people that can win the lottery. You have people that can make gambling income. And so, but they have their own set of rules that they go by to make that kind of income for them. And that goes in Forex. Because without that, then you might dig yourself deeper and you won't be able to come back on that.
What does your typical trading day look like?
Let's see, Sunday. Yeah, Sunday I always do my weekly analysis and then talk to the group, talk to my customers on Sunday, and then get ready to send out weekly chart analysis on every major pair that I'm going to trade on. And then as soon as Tokyo opens, I'm constantly looking at the computer screen and looking at my phone and trying to dive down within what happens within the first couple hours. Within the first 2 hours of Tokyo, you kind of get to see what is going to predict that trend for the whole week. Not a lot of people can see that, but if you actually start swinging, let's just say you wanted to test it out on a demo. This is what I did. I would test every major pair on my demo, and to let it swing from Tokyo all the way to the end of Friday of New York sessions, and look at it and see if it's still in profit or still in the loss. If it was in the loss, then I would go back and look at and see where that turning point was at. Usually that turning point is either on a Monday or at the end or at the beginning of Tuesday. And so now you look back and say, okay, now I'm going to go ahead and start entering my positions on Monday, Tuesday, or even though I'm still going to do it on Sunday. So I'm always constantly looking ahead, those first 2 days. As soon as the market's open on Sunday and then Monday, looking to see what's going to happen, because Monday is the first day of New York sessions, and you want to get a feel for what's going to happen to the New York Stock Exchange, the Wall Street, and you want to get to see where they're going to try and push that U.S. dollar. The U.S. dollar is by far the most strongest and the most traded currency everywhere. And so that's the biggest thing, is to see where they're going to try and push that U.S. dollar. Now, I'm really heavy and really more technical into the U.S. dollar, so I'm not as much into fundamental and into learning more about economics how I used to 2 years ago. So now I'm focusing and shifting more into as a technical trader versus as a fundamental trader now.
Nice. Okay, and I'm going to shift the questioning slightly.
Yeah.
So, do you trade cryptocurrency at all?
I don't trade crypto anymore. Ever since that broker, JAFX, ever since they got sued from CFTC.
Oh, what happened there? I did hear about them. Did they? Yeah, they got sued by CFTC.
Yeah, the United States. Yeah.
And what, they got put out of business, or they took everyone's money, or?
They pay the fines, but they no longer accept any U.S. clients.
Ah, right.
So that's the biggest thing right now, and I mean, it was already coming there anyways. So
you were trading the cryptos when you could.
I was trading crypto November 27. November of 2017. And then, if you remember, Bitcoin hit like 20,000 and right before Christmas, whatever it was.
Yeah.
It went down. There was no point trading anymore.
Right.
The spreads were so huge. There was nothing to make any money off of. They cut the profits down. I mean, if you, I don't know, there's no way the brokers were able to pay out. I mean, if it's constantly dropping that much, I mean, crypto dropped for a whole year. And so, and it's still in consolidation mode right now. And I don't really see anything for crypto unless, for my honest thing is that the price that Bitcoin needs to break is 5,000. Other than that, I'm not really wasting my time looking at it. And so if you look at Bitcoin's price at 5,000 a couple years back, that's a major key price.
Right. And so you're okay. So do you think it will break 5,000?
I don't know. I mean, I have my trend line set up on I think it was the weekly. No, on the daily. You can see. I mean, I'll show it to you when we're going into the charts a little on the charting, because that's what you want me to do. Like,
yeah, we'll jump on a video and check it up on the YouTube channel after. So we'll go over that one. Yeah, we'll have a look at the Bitcoin. Brilliant. So let's go back to a bit of the sort of mindset stuff. I mean, what do you think made you different from the average trader out there way back in the beginning? Like the traits that you had. And, well, we know you didn't sleep for a few years, but any other actions that you took that other people sort of might have missed along the way?
I have to say, when you start adjusting, and the number one thing behind mindset is that you always have to be an adaptable. You have to be willing to adapt yourself to any environment. And that's something that I learned in the military. But, I mean, it doesn't matter if it's business or personal. You have to be willing to adjust accordingly to the people that you talk to every day, to unexpected events. And when it comes into Forex, Forex is really great at testing your patience and the way you look at things. And when you come in and look at candlesticks, price, you see all these, you look at these graphs and you don't know what you're looking at, now, and you start, what I did was, I started to visualize where I wanted to go every single day. I was like, where do I want to put Forex? Is it just for making this kind of money and then just call it off? Or do I want to make this like a long time profession or something? If I want to make it long term, then I got to stop doing, when I look at the way that I was trading and my mindset 2 years ago, if I was still doing the same thing, I wouldn't even be here talking to you. I wouldn't even be in YouTube talking about Forex anymore. And so it's a whole different mindset of changing the way you think. And like I said, personal development comes a long way, but that's on you if you choose to personally develop and do self-development for yourself. Now, I do it every day, but I mean, that's not really for a Forex trader. I mean, you could get really good at trading Forex if you learn I would have to say, don't learn the fundamentals yet. The fundamentals can come later. Learn the technical analysis right away so that you can figure out exactly what your technical analysis is, so that you're not relying too much on those indicators, because indicators sometimes don't give you too much of a strong confirmation. When you get really good at your technical analysis, then you can hop back into your fundamentals. But I was more into fundamentals 2 years ago than technical. But now, if you take the time to learn more on your technical side, then you can develop, when you want, when to take profit, when you want to get out, when you're gonna identify these patterns. You're gonna identify, what sessions makes the most money for you, what sessions don't make the most money, the least amount. You're gonna find out, here I live up there in Wisconsin, so you have 4 seasons. You're going to find out that, to me, tax season is by far the best money maker. Tax season from February, March, and April, by far the best months for me to trade. Now, summer is the worst. So now I know that, from 2018 of July and 2017 of July, I lost a lot of money in those 2 months, especially the summertime. July and August were not the greatest months of trading. So now I know I'm going to cut back on July and August. And then when you come back into the fall season, September, October, and then September and October, then you get to see, okay, now everybody's, kind of like college. Everybody's going back to school. You get to see a little bit more action. They're not on vacation anymore. So there's more trading involved. And then when you come in back into the holidays, November and December, then you don't really want to trade too much, because the holidays are more focused on people, going on vacation. Why would people spend more time trading, especially the big guys? I'm not talking about the average people. So you got the big banks, the big investors, they're not going to waste their time, especially on a holiday. So you put everything all in one, and what you're great. Like I said, if I wanted to scalp, I could scalp. So, scalping, swinging, you find your happy medium. Whatever it is, right here in the middle, that's something that no one can't take away. That's something that, to be honest, like, whatever it is right here is in the middle. Only you know what it is that makes you money and lose money. That's what it is. That's the biggest thing, is whatever it is that meets the middle from scalping, swinging, and all of the fundamentals and technical comes right in the middle. That's all on you. That's all you right there, because you know that's where it's going to make you or break you. And like I said, after at the end of April, I really thought about reconsidering everything, and shift towards something else, different opportunity. But after 2 weeks of redefining where I really wanted to go and want to make this work, I put my foot down and I said, you know what, I'm going to make this work consistently, not aggressively. I can always focus aggressively on, when I have the time to, but not when I want to make the type of income that I want to make for my family and income for me. And if I don't, then it's kind of like putting yourself back to square one every time, and then that's not where anybody would want.
Exactly. Yeah, because I begged the question at the start of the show, like, if you got to 26,000, why didn't you withdraw some of it, even just 20 or something, and start again, and then you got the buffer. But anyway, it is what it is, and good lessons to have. So, so if you had to split your trading into technical versus fundamental now, what's that split look like?
If I were to trade technical now?
No, if you had to split it up into your analysis, are you doing, say, 50-50 technical versus fundamental, or is it different than that?
No, I'm more 80% technical now versus I was 80% fundamental. I didn't really care looking at the charts as much as I used to now.
Wow, that's quite odd.
Yeah. With being a fundamental trader, I was more focused on every single high-impact news. I was more focused on Forex news, unexpected events, political events, something that would drive the currency based on the economy. So if it wasn't the economy, then I would be paying attention to what President Trump was doing. Because whatever he says really dictates a lot what happens to the U.S. dollar. And that goes with, looking at the U.S. Federal Reserve. I don't really look at them as much as I used to now. And sometimes, if I were to trade high-impact news, you can base high-impact news on technical analysis. And you don't have to read up on the news. Now, I used to read up on every single news, but now I don't. So, like I said, what I said before, if you focus more, if you know that you're going to stare at the screen all day, have a specific intent of looking at the screen instead of, because how I was doing it, I was just staring at the next candle to the next candle to the next candle, and I didn't know what I was identifying. I was just constantly trying to figure out when I want to get in and get out, and that's it. That was my way of scalping. I didn't really care for looking at price, what a candlestick meant. I didn't know my terms and definitions of trading back then 2 years ago. And so I would call lots. If I was trading one stand, I would call it $1. I don't know why, but that's what I was calling it as, because I see $1. Yeah. I was turning $1 into a couple $100. That's how I was looking at it. But yeah, if you take the time and start charting and looking at these charts, whether it's for scalping or swinging, you're gonna figure out real quick on where your technical analysis is at, and from there you're gonna have to look at see where you want to improve. You can't improve on everything. Well, you can improve on something that can make you some kind of consistent money. That's what you're trying to look for. If you can't find a consistency in looking at the charts, then you're not going to find a consistency of making the profits or the pips that you're trying to make for the day or for the week. It doesn't matter how many pips or profit you make in one day, because you still have, let's just say you made a lot of money on Monday, but you still want to trade. So guess what? You're going to keep trading Tuesday, Wednesday, Thursday, and Friday. That's how I was. I don't care how much money I was making on Monday, because the markets was still open. So I kept over trading. If you're going to keep over trading, that goes back to the mindset. That really goes back to, your discipline of trading. It has nothing to do with technical analysis, though. I have over 400 videos on trading, And I gave out. I mean, to be honest, I gave out a lot of free knowledge out there. If anyone wants to actually pursue, my way of trading now, and if you, like I said, the technical analysis is always there, but there's no way I can tell you to take profit. There's no way I'm going to be like, oh, well, you should take profit because this might happen. It doesn't matter. It doesn't matter what I say. It doesn't matter if I'm giving out signals. It doesn't matter because the most important thing is that that's your account. You do what you want to do with it. And if you lose it, that's on you. And so the most important thing is that if you repeat the same mistakes, it's always going to be there. If the lesson is not learned, it's just going to continue. Yeah. That's the most important thing.
Yeah, it's a learning and evolving thing, isn't it? I'm sort of understanding that now. Now, from a technical point of view, I mean, if you had to recommend the guys go off and study 3 things on a price chart, what would you be recommending they focus on?
Oh man, well, I'll tell you how I went straight into technical. I read the first 4 chapters of Naked Forex, and then that Candlestick Bible from that Japanese guy. What's his name? The Candlestick Bible. All I did was I looked at every single candlestick figure, like whether it was a doji candle or an inverted hammer or shooting star, morning star, double top, double bottom. I was constantly looking at every single candlestick pattern and what each individual candlestick meant. I look at every single picture of those candlesticks, memorize it, and then I read the first 4 chapters of Naked Forex. I did that for a couple of days, just reread the whole thing, retest some of the strategies, retest some of the methods, because at the end of July of last year, I finally shifted over to be 100% technical trader based on Naked Forex on price action candlesticks. And so it was hard to take off RSI, MACD, stochastic, the moving averages. It was hard to take off the Bollinger Bands. It was really hard. But when I started seeing where price was going, or when I started seeing a candlestick pattern or some kind of structure where it might cause a reversal, then that was my go-to signal. And it gave me a much more better level of confidence and a much more better confirmation versus trying to rely on every single indicator that I was using. And so from a technical standpoint, if you really want to improve, you can do what I did. Read the first 2 chapters of Naked Forex and the first 2 chapters of Candlestick Bible. They really lay it all out for you. If you don't understand the first chapter of any book, then you're not going to understand the more in-depth of what the book is trying to tell you. And that goes in any book that you're reading, to be honest.
I think I actually read only the first 2 chapters of Naked Forex as well. For whatever reason, I couldn't get any further than that. I can't remember why, because it was probably about 2 years ago, maybe a year and a half. Anyway, we're going to dive into the quickfire round. So this is I think it's 9 quickfire questions to help the guys try and work out some more stuff from what you're doing different to them. So, how long did it take you to go from newbie to consistently profitable?
I would say after the first 8 months. August of 2017, I found my consistency. That was the end of summer.
What's your mental approach to trading, and do you have any special techniques you can share with us?
Mental, man. I always remind myself, especially on a Sunday, that not every Sunday repeats the same Sundays, and not every week is going to repeat the same weeks. And I always try to identify, my goal is to always identify at least 1 or 2 weeks ahead of the markets based on looking at the price, on the weekly and monthly charts, and the candlestick structure of the trend on the weekly and monthly chart.
What's your favorite entry setup?
Entry setup, I would have to say Testing, yeah, I'd have to say testing your micro lots. If you, like I said, if you're not going to test it, then look at your. Or to me, I would look at candlesticks. So if it was an inverted hammer, or it's creating, or those two major candles on the 4-hour or daily. So I'm looking at higher time frames. Then I would be looking to swing a buy at the bottom versus a sell at the bottom.
What strategies do you use to exit or manage active trades?
Exit. The biggest thing is to always have an exit strategy on how much money you're trying to profit for that session or for that, or for me for that session or for the day. That's the most important thing. It's not about exiting and all of a sudden re-entering again. Then that means there's got to be some specific profits or specific tips on what you're trying to make for that day.
What's your recommended trading book?
Oh, recommend trading book. I would have to say Currency Trading for Dummies, the 3rd edition.
Oh, okay.
There's some really great, interesting economical fundamentals on that book. And if you take the time to read, if you take the time to read every single economical structure for each country, then you can see how the technical analysis plays along with that country. So,
interesting. Now, if there was one thing you'd recommend any retail trader spend the next month mastering, what would it be? Why, and how could they go about mastering it?
Naked Forex. If you seriously want to take it up to the next level, or even if you're new, like I said, read the first 2 chapters at Naked Forex. It'll change the way you look at the charts. That's the because when you come into trading, you're constantly looking at the charts for something, and if you understand, like I said, like I said, if you understand the charts, I'm telling you, you're gonna take it somewhere else to a whole new level for yourself. Now, so that's the biggest thing. Take the time to understand. If I were to go back in time, I would do Naked Forex. That would be the biggest thing.
What's your preferred broker and trading platform?
I always use MetaTrader 4, especially on the phone, and then C-Trader would be the second, but C-Trader doesn't happen, and C-Trader doesn't open up for all brokers. So,
and any particular broker?
Right now, be just LKDFX. I mean, I'm still using Trader's Way, but LKDFX is my only broker right now. That's my moneymaker right there.
Yeah, they seem to have come out of nowhere for a lot of the US traders. Yeah,
it did. Yeah.
Right. So, if you could leave our listeners with one piece of advice, what would it be?
Oh man, I don't want to say sacrifice sleep because some people sacrifice sleep and still haven't learned anything. So, I want to say you got to find that adaptability. Once you find yourself being the best adaptable, once you find that way of adapting to the markets, whether it's losing or making money, whatever it is, but it's best when you find out when you're losing more, is that you figure out fast when you want to cut losses. That's the most important thing. If you're not ready to adapt to the Forex market, you're going to constantly lose. And nothing, like I said, nothing sets apart, especially when you have a technical, a fundamental, but you have the adaptable trader that's always in. They always move in and out, and they know when to get in or wait for the next day. And that's something for anybody, including me. Because if I'm not willing to adapt to the environment, I'm always going to end up, putting myself back in the same shoes where I was back 2 years ago. So the biggest thing is finding that adaptability in Forex.
Yeah, I like that. I like that a lot. I know that, sort of talking about cutting your losses, I often would, when I was back testing, take it's just back testing, so it's like literally sort of just manually going through and knocking through candlesticks, and I'd see it start going against me, and I'm like, I know this is going to hit the stop loss. I literally know. But then I'd see the same thing happen time and time again, and it's like, hang on a sec, if I know it's going to hit the stop loss, why the hell am I taking the trade in the first place? Or why am I holding on to the trade? Yeah. And then, hey, why am I not taking it in the opposite direction? Because it tends to carry on anyway. So, yeah. But was I going back and doing the learning and adapting? No. And that's probably it's one thing I've actually sort of really hit home in the last few weeks. So, right, last question of the show here. Koo, we want you to give us the bones of a full trading strategy. The entry setup, stop loss, take profit targets, market time frame, basically something our listeners can have a play with at home this week.
Basic strategy for them?
Yeah.
If they can focus on, if they want to focus on scalping, start with the 15-minute chart. If they want to focus on swinging, start with the 4-hour. With the 15-minute chart, you get 15-minute increments in 1 hour, so that's 4 15-minute candles, which gives you enough time to catch 30, 50 pips, or maybe even up to 100 pips, depending on the movement of that currency pair. And then with the 4-hour chart, almost every book that I read, the 4-hour chart is already talked about as the most accurate chart for swinging, because there's 24 hours in a day. Each session is 8 to 9 hours. With that, you get 2 4-hour candles in each session. So you get 2 4-hour candles in Tokyo, 2 4-hour candles in London, and 2 4-hour candles in New York. So I'm not talking about Sydney because the spreads are so high during the Sydney Open. So with that, you take 4 times 6. That's 6 4-hour candles, which equals 24 hours in a day. That's why your 4-hour candle is really, really important to pay attention to, because that makes and creates the daily candles. Your daily candles create your weekly candles for the end of the week. So stick with 15-minute chart if you want to try scalping. That way you can catch more pips. And then the 4-hour, test it out for swinging long term. That way you can hop in from the daily to the weekly to the monthly, work your way up.
Nice. Cool. Right, so before we wrap up, what's the best way for my listeners to get hold of you?
I'm always on Telegram. If not, you can email me. I'm always constantly looking at my YouTube too, so you can always comment me there. If not, but like I said, Telegram, like I said, you can easily email me or Telegram me. That's the biggest thing right there. So
cool. Well, look, a big thank you to Koo for sharing with us today. Everything we've discussed here, along with all the links, are in the show notes. To find them, simply search for Koo, K-O-U. It's K-O-U, right? In the search box on TradingNut.com. Until next time, I wish all my listeners trading happiness and success. All right, folks, so there we have it. Now you can get access to the video on the YouTube channel or on the show notes, so go and check that out. We did a video where you actually walk through, where Koo walks through the levels that he's picked for Bitcoin, and then we go over the USD JPY chart, and actually I talk about one of my trades that I took, and you see how he analyzes that chart and picks some key points where you're going to get some low risk, high reward entries. So go and check that out on the show notes. Whilst you're there, guys, check out the premium interview. So if you want to get access to the interviews I recorded as part of my 52 Traders podcast, then head over there to the premium interviews. You can either buy them individually or you can get the whole series. So if you get them individually, you get the show notes, you get any notes that were taken, any videos that were left, or any marked up charts that were given by the traders. And if you get the whole lot, you can listen to it on your mobile phone like a normal podcast, and you get your own private feed. It's basically the bells and whistles package. And look, there's coupons in the members area, so go and grab the coupons, get the discounts instead of paying the full price. All right, folks, I'll see you on the next episode of the Trading Nut podcast. Be sure to subscribe if you're not subscribed, and be sure to leave a review if you haven't already. All right, folks, see you then.